Hey everyone, so I've been getting a lot of questions, and they're good questions from you about what you should be investing in now. And so I wanted to take a moment to talk about the best investment strategy really for the next year or two. And to do that, I wanted to start by splitting off the idea into first short term and then long term investments. So, whenever you're investing for the short term, it's money you're going to need in the next 5 or fewer years. So, whether you're saving up for the down payment on a house or a big vacation or an education tuition payment, or you want to buy a new car or a used car, the money you're going to need in the next 5 years should be put into short-term investments, more conservative investments, things like cash, a high interest yield online savings account like Ally or Radius Bank, where you can get, maybe 1% on your money, so you can at least almost keep up with inflation, can be a good place to park your money. Another option is to put it into a short term bond fund, like a total market bond fund, that really is going to give you maybe 1 to 3% return over the next couple of years is a little bit more conservative way to invest. So keeping in cash or a bond fund, or you can do a CD ladder. So some banks, they offer certificates of deposit, and you can put your money in there, and basically you have to commit to investing the money over a set period of time for a defined amount, return, or interest rate. So those are the three ways that I recommend saving for money you're going to need in the next 5 years. So cash, in a high interest yield savings account, a CD, certificate of deposit, or within a bond fund. You shouldn't be investing the money that you're going to need in the next 5 years in the stock market because, as you know, prices are extremely high right now. And from my opinion, even though you can't predict the stock market, based on all the data that I've seen, it looks like there's going to be a correction in the market within the next year and a half, or by the year 2020. And so the stock market will drop, prices will get more affordable. And so if you keep your money in cash now, that's actually going to be a good buying opportunity for you when stocks drop. And so putting cash and keeping some money on the sidelines now is actually a wise short-term investing decision. And now I also want to talk about long-term investing strategies. So this is money that you're going to need in 5 to maybe 30 years. And I'm still incredibly bullish on US equities. And so investing in like a Vanguard Total Stock Market Index fund or a Vanguard S&P 500 fund is a wise decision for the long term, and continue to invest that way, whether it's in your 401k or within your IRA, because I believe that over the long period of time, stock markets, even though the price of stocks will drop in the next year and a half, over the long term, they're going to continue to increase over time. The one caveat is if, as I mentioned, you want to keep a little bit more money in cash right now on the sidelines so you can be prepared for a buying opportunity when prices start to drop. The real challenge with this is that it's actually incredibly difficult to time the market. And so that's basically buying when stocks are at their low. And so in order to take advantage of the ups and downs in the stocks market, I recommend that you continue to invest even when it's going up and going down. So you can take advantage of what's known as dollar cost averaging, which is basically you're buying shares when they're low and you're buying them when they're high. But over time, as stock continues to go up in value, you've locked in the price at both low and high values. And so I continue to invest right now in the US equities market, even though you could, if you want to be a little bit more conservative, putting stocks or putting cash on the side to invest in the stock market once it starts to go down. And then the final piece is real estate investing. So I know I've gotten quite a few questions from you about whether or not it's a good time to buy real estate or whether or not you should wait. And this is a really tough question right now because in a lot of markets that have been historically really expensive, like the Seattles, the Los Angeleses, the Denver, the New York Cities, the Washington, D.C.s, the Houstons, the prices are actually starting to drop in those markets. And I think the prices will probably continue to drop in a lot of markets markets over the next year to a year and a half, especially as stocks are set for a correction. And so often when stocks go down, real estate's going to go down as well. So if you're looking to buy a home, if you can find what you view as a really good deal, now can be a good time. But don't invest in a really expensive market, because you're likely not going to make money over the next couple of years. With that being said, if you're going to live in your neighborhood or in this home for the next 10, 20, 30 years, buying now, even though home prices might decrease in the next couple of years, you're still going to be net positive over the long term. And then, you could be investing that money in real estate, in paying down a mortgage as opposed to paying someone rent. So the one caveat to investing in real estate right now is that if you're going to be in a place for a long time, it makes sense to buy even if real estate values are going to go down over the next 1 to 2 years, because over the long haul, they're likely going to increase and go up in value. And over time, even though the appreciation of the property, the value of the property might go down in the short term, the fact that you're paying to a mortgage and you're paying that mortgage down might be more cost effective than paying rent. With that being said, rent does give you more flexibility to perhaps make a decision for another neighborhood. And so now's not a great time to buy real estate, nor is it necessarily a great time to buy in stocks, really for the short term. But over the long haul, over the next 10, 20, 30 years, both stocks and real estate remain a good long-term investment. And the final piece of advice, if you're looking to buy any individual stocks, while I'm a big fan of index funds, I do recommend that you can put between 5 and 10% of your net worth in any individual stock. I'm still incredibly long on Amazon. I think over the next 1 to 2 years, Amazon, they're either going to be forced to split into two companies, or the government's going to force them to split into multiple companies just because of all their big businesses and their defined lines of business. And so at that time, the stock will go up. I'm also incredibly bullish for Amazon over the long term, as opposed to a lot of the other technology stocks. So hope this was helpful. Definitely think about your investments. The short term, be more conservative. The long term, continue to be aggressive and continue to invest consistently, really as much as you can, into your 401k and your IRA. And if you have money after the fact, investing in long-term index funds, total stock market index funds, is a wise decision. So if you have any questions, any investing questions, post them underneath this video or in the forum, and we're going to cover investing in next week's webinar. And so I look forward to chatting more about it then. Hope you have a nice weekend, and I will chat with you soon.